I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, one of our real regular guys, and I like him because he has an analytical mind. We don't give trading advice here on USA Watchdog, but still, traders are analysts. They have to be, and they have to be good, otherwise they'd be bankrupt. With us again is Gregory Mannarino from TradersChoice.net. Gregory Mannarino, thanks for joining us.
Thanks for having me again, Greg. I always appreciate it.
Well, first off, let's talk about the last time you were on. You were buying the dips. You were saying, hey, this is going to turn around. The market's going to ricochet back up. I was scratching my head thinking, boy, this looks bad. And you said, no, I'm buying the dips. It's going to go back up. You watched, they're going to push the thing back up. And they did. You were right. In the pre-interview, though, you told me, I'm scared. I'm not buying the dips anymore. I'm selling the spikes. So what happened? What changed in less than a month?
A lot of things changed, Greg. If you recall in that video, the last one that we had done, I spoke about what the Fed was trying to do, and it worked. What they were doing here was rattling the emerging markets to drive cash into the U.S. equity market, drive cash into the U.S. bond market. In my opinion, this is played out. This has played out now. And again, you're absolutely right. And anyone can verify this information. Go to my site on YouTube. I told everyone that would not last. I told everyone what I was doing, buying those dips because it was going to recoup every bit of those losses. And that's exactly what happened. It was an incredible trade. It was an incredible call. I'm not tooting my own horn, but it's a fact. Now, we are right at this moment, Greg, at the end of a particular cycle in the market. It's very, very interesting. I actually made a chart here I'd like to share with you and your readers, and this is why I'm a little scared here. So let me just show you this chart real quick. For those of you out there who are technical analysts, you know what the Elliott wave principle is. It's basically a series of impulse waves and retracements and in a correction phase, okay? We are right now, in my opinion, and I'm going to show you this chart here, right at the precipice of a correction phase, which could be severe. As a matter of fact, again, go to my channel here on YouTube, and you will see I have done video after video, kind of raising the specter that something looks awry to me. And I think there's a high probability, I would have to say better than 60%, maybe higher than that we are going to witness a correction here. And I'm not talking about a 6% like there was last time where I was buying those dips. I'm talking about a 10 plus, maybe a lot more than that. So let me just show you this chart here real quick. Okay. This, Greg, is a 1 year chart of the Dow Jones Industrial Average. Can you see that?
Oh yeah, I can see it loud and clear, bright and clear.
Great.
Hold it still. There you go.
Yeah. So what I've done here in red is I've outlined an Elliott wave. Again, this is a 5-segment wave. There are 3 upward impulse waves. You have impulse wave 1, impulse wave 2, impulse wave 3, and you got wave 2 and 4, which are retracement waves, okay? Now here, then you have an ABC sequence, which are the correction phase, okay? This A wave here, that was the 6% dip that we saw, okay? Now we're back here at the top of this B wave. The next wave to come, if this is correct, is a C wave, or a real correction wave. You got that? Now, you can verify this from many other charts, and just by looking at the fundamentals of what's going on here, you can understand that we see a market. I want people to really think about what I'm about to say here. The market is moving further and further away from the fundamentals that support it. This cannot go on. It can go on for a little while, but we've already had no less than six bad rounds of economic news over the past 2 weeks. One of these are going to impact, and it's going to cause this wave C to start, and I think it can be profound. So what I urge people to do here is, again, don't take anyone's word for all this, not even mine. Do a little research on your own. Look up the Elliott wave principle. and you'll see what I am talking about. This could be profound. So what I've done, and I've let everyone know this, and I go over this on my site all the time, I am now net short this market. I started buying puts last week against the market. I've added to those positions Friday. And I will do that again if the market does gain a little bit for this next drop. That's how certain I am that we're about to enter the C wave segment of this Elliott wave.
So the last time you were, as it went down, you were buying it to go long. Now it could be going up, and you're buying it to go short. George Soros, doesn't he have a huge monster, more than $1 billion short on the market right now, George Soros? And he's got a lot better connections than you. Although you're smart, he's got a lot better connections than you. And
Yes.
that's got to be policy. He's thinking this thing's going to crash. Well, tell me about what you think about George Soros. You and him are basically doing the same thing.
We are doing the same thing here. Apparently, he's added to his short position against the S&P 500 for the third time now. I believe he's holding about $1.3 billion short against the S&P 500. And, you know, what I want people to understand here is it's not just George Soros that's short this market right now. You've got Goldman Sachs who's short this market. You've got JP Morgan that's short this market. Obviously they're in a better position than I am to, you know, better gauge what's going on. There's no doubt about it. But you do not need to be Lloyd Blankfein here to understand what the charts are trying to tell us. And I know this, believe me, and I've got a lot of people that, you know, don't believe in technical analysis. I was trained as a technical analysis initially, and I learned, and I'm going to say this right here, that you cannot just go by what you see in the charts here. You have to put this together with the fundamentals and be able to read this whole thing. It's a language, Greg. That's what this is. You look at the fundamentals that are going on. Again, we have a market that continues to move away from the fundamentals supporting it. You look at these charts here. It's pretty evident to me, and it must be evident to George Soros, JP Morgan, Goldman Sachs, and a lot of other big players out there that are betting against this market, that something big looks like it's on the horizon. Now, let me just go back to that real quick.
Well, what's coming, though? What do you think's coming on the horizon? What do you think's going to push the thing over? You know, because I think it crashes this year. I just think that last year was a gift, and 14, we're looking at 2007 and 2008, the same kind of setup in 2007 and 2008 with 14 and 15. Do you think it crashes this year? What is the ominous thing on the horizon?
Well, let's look at this chart again real quick, Greg. You talk about this is a year to date of the Dow Jones Industrial Average. We were in this phase, okay? We were in this phase. So that was why the market was rising. Now we had a little correction here. Look at this pattern here. Focus on this, okay? Head and shoulders. That's also what seems to be developing here. The shoulder, head, shoulder, down. That's the C wave segment, okay? So again, that was in the charts. What was happening last year here? All right. I don't want to sound like too much of an alarmist here, but we could be weeks away from a major market event. Massive sell-off here. And I just want people to be aware of this, you know, and be able to gauge what they should be doing here. Now, none of it is written in stone.
But why do you think that, though? Why do you think we're getting ready for a massive market sell-off?
Again, we're at that C wave segment in this Elliott wave. That's a big one here. But there are other ways, too. If you were to look at, for example, a long-term chart of the Dow, okay, I'm going to stick with the Dow because that's this chart that I'm in. In fact, I did a video about it on my YouTube channel. We have three major peaks that we've seen over the long-term charts. We had the dot-com bubble, we have the housing bubble, and where we are today. Okay, they're all in a sequence. As a matter of fact, there's a particular pattern that I go over. It's called a broadening wedge. Looks like this, where the market does this. It's also five segments. 1, 2, 3, 4. Bam, the next one's going to go down. And in my opinion, at least. And we're right there as well. And again, just look at what's going on here with the fundamentals supporting this market. It all just doesn't look good to me as an analyst, as a trader who needs to stay on top of this 24/7. That's what I do. You know that. We speak about it all the time.
Well, we talked in the pre-interview about commodities. And, while I was, commodities went up. Go ahead, finish your thought, but let's get into commodities where money's going.
I'm glad you brought that up. That's because I want to talk about that. It's very, very important. It plays into exactly what I'm leading to here and why I'm nervous about this market. So what have we got here? And I always urge people to do this on my market report, is this. Watch the movement of cash, okay? By observing where cash is moving, you can also gauge as to where it will possibly move in the future. So what we've seen here, and there's no doubt about it, we've seen, and the mainstream media is even talking about it, we're seeing a movement of cash here into commodities. We've also seen a flight to safety regarding the bond market too. I mean, there's a lot in play here. But what I think is going to happen here, Greg, is this. And I've talked about it for a while now. I said gold and silver, I'm talking about the paper derivatives here, would stay in the trading range for a long time. They did exactly that. However, they've now seemed to have broken out. I also said that I expect this to pull back a little bit. What would cause a pullback here in the paper derivatives? This. If we get a market sell-off here, which I believe, again, has a high probability of happening, it's going to pull initially, and there's a reason for this, is going to pull gold and silver down with it, commodities down with it a little bit, because people are going to need to cover positions that they would say long or short or whatever it might be. They need to cover those positions, and these are liquid assets. You got that? So once that plays out, let's say if I'm correct here, and we enter this C wave segment of the Elliott wave, all right? As we do that, I believe we're going to pull down commodities a little bit here, but then we're going to get a breakaway. I refer to this as an X wave. Okay, I actually wrote about this in my book, The Politics of Money, and I actually did another book on it a while back, specifically talking about the X wave phenomenon. Now, exactly. My timing was off. There's no doubt about it, but it doesn't matter because it's still going to play out exactly the same way. What I mean by an X wave is this. We are going to get a drop off here in commodities, which is going to parallel the market for a little while. And then as the market continues down, we're going to see commodities go up, forming an X wave. This is very profound, in my opinion. And this is why I predict as the market drops here, and I've been saying this, Greg, since day one. You know it. Everyone else knows it here. The cash does not go to money heaven. There are two people on the sides of a trade. I'm betting against the market. Someone's betting for the market. So if I'm wrong and he's right, he kind of gets my money, if you think of it that way. My money doesn't go to money heaven. It goes to the guy who's betting the opposite of me. You got it? Soros is betting against this market. JP Morgan, Goldman Sachs. They're going to get everyone money who's betting long this market. That's the way it plays out. So, go ahead.
Go ahead. Now, go ahead. I'll finish your point. And I have one question. Go ahead.
Yeah. So basically, this is how I see it's going to play out. As cash is leaving the equity market, leaving the bond market, it's going to seek a place to go. It's that simple. It's just the movement of cash is going to go into commodities after we get that initial drop. Because like I said, I think there's going to be short covering, position covering initially. And then we're going to get that X-wave pattern. There's no other way this is going to play out, in my opinion. I think about this all the time, and I can't imagine another way.
Could this be a way for them to, they need to recapitalize the banks. We really can't print any more money unless the dollar goes to, will go poof. Can't we just get all of our banker buddies on the short side of the trade and then cut the legs out under the market and recapitalize the banks? Couldn't that happen?
Greg, what this is here, and there's really no other way to put it, and I've also discussed this and we've spoken about it, the Federal Reserve is a deliberate serial bubble blower. Okay? They've hyperinflated this whole thing. They've hyperinflated this stock market. Why? Because they're going to allow this thing to blow off. And the JP Morgans who are already short this market, the Goldman Sachs that are already short this market, the George Soroses of the world that are already short this market, this is a wealth transfer. We've had the pump. We're going to enter the dump. Now, the dump is the wealth transfer. Everyone that's been long this market, everyone that's been piling into this market. Now, if you look at market sentiment right now, there are too many darn bulls here. When you see too many bulls in a market, that is a big red flag here that you need to be bearish here. And that's what the big banks are doing. That's what the George Soroses are doing. That's what the Greg Mannarinos of the world are doing. We're getting short here. Because again, we're looking to capitalize on this whole thing. That's what this is all about. It's sad what's going to happen to people here. But people are going to gain wealth beyond their imagination through this mechanism here. And that's just the way it is. And I'm trying to raise awareness. And I want people to understand that they're very vulnerable right now. If you're long this market, if you have a 401k plan or something like that, you are very vulnerable. Remember what happened in 2008 to your 401k plan? It's going to be worse this time. Absolutely. And where's that wealth going to go? It's going to go to the JP Morgans, the Goldman Sachs, the George Soroses, and the Greg Mannarinos of this world. I'm just warning all of you. That's what's going to happen.
Well, this is better than a bail-in, really. I mean, this is better than a bank holiday. This is a giant pump and dump. You think this is done on purpose. This is not an accident. And so, therefore, the next Fed meeting, when Yellen comes out, she's not going to worry about all this bad economic news you touted at the beginning. Housing starts were bad. Unemployment didn't go down the way they thought it would. Retail sales were off. Carl Danger says they were off by, if you really strip out all the garbage and you compare the same period from a year ago to this last year, is down almost by double digits. We've had huge misses in all kinds of arenas. And then Janet Yellen would come out and say, yeah, we are going to go down to now $55 billion a month, and that's going to be ballyhooed as though some improvement. But you're saying that they're likely they're going to taper again. They're going to taper the next time.
I think they are going to taper again. Their responsibility is to the banks that support them. That's what this is all about here. It's not to the American people. It's not to foster any kind of a global economic recovery. What we're witnessing here, Greg, is a decimation of the middle class here. Okay, we've gone over this in the past as well. This is a fleecing that has been set up here, without any doubt, and that's where this is leading to. And all the middle class people out there who have these 401ks, who are relying on retirement plans, who are relying on this stock market here, they're the pawns that are being set up in here. They're being set up for the JP Morgans, the Goldman Sachs, the Morgan Stanleys, the George Soroses, and people like me are trying to take advantage of it. I don't want to sound bad here, but look,
but you're not sounding bad. I mean, you're just analyzing what's going on, and your story, what you're saying, I think is very plausible. How could George Soros be a $1.3 billion on the short side without knowing? He's not guessing. He's not doing what you're doing, which is analyzing, and he sure as heck isn't guessing. So he's got some insider knowledge. Now, you're looking at charts, and you're looking at unemployment reports. You can look at the setup of other people and all. I don't think he's doing any of that. I think he's got mainline into the Federal Reserve, and I'm not accusing him of insider trading, but I'm thinking his sources are a lot better than yours and mine. He knows he's a multi-billionaire. He's one of the richest people on the planet. So his sources are better. But still, I mean, that just looks like it's going to be a giant transfer of wealth, like you said. So what should people do? Should they be sitting just in cash? I mean, because the bail inspector, according to people like Jim Sinclair, is real. Should you just go ahead and say, hey, listen, I know gold's been rising, but I'll just go ahead and buy it, or silver's been rising. Should I just buy it and hold it as a core asset and wait for the ricochet? Because if you wait for the lowest price possible, it may not be there. What would you tell people to do to protect themselves from this big, giant suck down that we're apparently getting ready to have with the markets?
All right. Number one thing, I would get on the horn with your institution, for example, whatever it may be. If you have a 401k plan, express to that individual your concerns. What you're going to hear from these people is don't worry about it. Did they warn anyone prior to the crash of 2008? What did they tell people to do? Don't worry about it. Hold on to it. People got destroyed, absolutely destroyed, because of their financial advisors who are so damn smart, didn't have the brain power to tell them, maybe we should take some of these assets, we should sell them, we should put it someplace else for a little. Absolutely not. They're going to allow you to be destroyed. People need to take the initiative. Okay, so what you need to do is, if you're vulnerable right now, if you have equities on the long end here, you need to think about a way to protect it. Okay, there are a lot of ways to do that, but let's just go back one moment here. Again, I think this market pulls down, it's going to pull commodities with it. I'm not saying you should wait for that. People need to be diversified now. You need to be in precious metals. I do not own a gold mine, Greg. I do not own advocate for any company. I'm just telling people the way it is. I'm not out here to blow sunshine up anyone's crack. I've been seeing that a million times. I'm just telling people the way I see it. If they don't agree with me, that's fine. But I can tell you this: people have been profiting greatly things that I've been saying over the past several months. You know that's true. My site, all the equities I put up there, you can look at my performance. It's stellar.
I understand, but should people just go ahead and buy physical metal now, and
yes,
even if it sucks down?
Beyond any doubt.
That's what you're doing.
Any doubt.
That's what you're doing.
That's what I've been doing for years, and I will continue to do that until the cows come home. This is what we need to do. All right, let me go over another scenario. I'm going to put a visual on this so people can get it. And I want people to do their own research. Go back at every single bull market in equities through history. Bull market in equities, you get commodities that become somewhat suppressed. This is the movement of cash here. And as the equity market begins to fall, initially I think it's going to take commodities with it, but then we're going to get this. Commodities are going to go up because they're real. Not that I'm saying that these companies, that if you invest in them, aren't real either. Of course they are. That's why I invest in them myself. These companies have value, but they're overvalued. And they've been overvalued because of speculation. They've been overvalued by speculation that's been allowed by the Federal Reserve's zero-interest policies. All of the Wall Street banks have been involved in this, and they're doing it on purpose. They've kept interest rates low, borrowed this cash for nothing. They speculated within the market. This has caused a speculative bubble of epic proportions, and I don't want to hear anyone tell me that the stock markets are based on historical norms, their P ratios are just a little bit stressed. We've never stretched. We've never seen this before. We've never seen an environment where we've had a Federal Reserve that's pumped the world full of liquidity. So there are no historical norms. So forget about it. This, in my opinion, Greg, again, high probability that we're going to see a major market event very soon, and I want people to be ready for it.
So get metals, get liquid, get short, get out, but get something. But don't stay where you are.
No, and you can't be in dollars. You know that's just number one. You want to sell your stuff in hoard dollars. That's a huge mistake, in my opinion. I think people need to diversify right now into metals. They got nowhere to go but up once this market comes down. I think it has a high probability of that. These things are grossly undervalued by metrics that I could just sit here and spew out probably for an hour.
Do you think we get the same setup, though, as we got before? And this is my last thing. The 2007, 2008, where we have the blow-ups and then the final crescendo in 2008 and then all the money printing. Is that the same thing going to happen this time, 2014, 15, 7 years apart? It's kind of a biblical number, 2, 7 years. I don't want to get all theological on you, biblical on you, but things happen in 7-year increments. I mean, blow-ups happen in 7-year increments, and we're entering that now again where, 2007, 2008 is right there in that increment. Do you think it blows up this year or starts to blow up this year? I think it can start to blow up this week. This week. We're not that far from this. We know this. There's no doubt about it. Look at these charts here. Look at the chart that I just showed you one more time. Look at this wave sequence. It just looks like the next step down is going to be hard.
It's a C wave, if I'm correct. I mean, and I want you to look at this. Look at this shoulder. Look at this shoulder. They're just about equal. Yeah. This makes me think that we're at the top of this B wave segment. The next is a C wave. I mean, this could be wrong. It doesn't have to be right.
I smell money harvesting coming. How are you making money? The S&P is back where it was in 2000. How are you making money in the stock market unless you're trading like you are? Now, last question here. You're at the Mastermind Symposium in Las Vegas, it's where you live. And this is my last question. And you've talked to, Craig Ferguson at TF Metals Reports. You've talked to, there are many people out there. Good David Morgan was out there who's been a guest on the show. I'm going to probably try to book, Craig Ferguson of TF Metals Reports. You're a regular, smart people out there. These are smart people that handle money and newsletters and that kind of thing. What was the consensus of everybody out there? What was your feel for the speakers at the Mastermind Symposium?
These are smart people, Greg. There's no doubt about it. And I would have to say we're all on the same page, almost without exception here. That says a lot.
That
I
14
think,
is going to be a pivotal year, and not in a
yes,
good way.
not in a good. Well, it depends on how people. It's a
Yeah,
good
for
perspective.
people who are buying gold and silver.
For people that are buying gold and silver, I think this is going to be a great year. For people that are short this market, I think we may be at the end of run of this bull market. It's very possible. I had been saying earlier, I thought that there's a possibility that this market would, this is what I think may happen here. We could see a significant sell-off here in a short period of time. This is going to present major opportunities here for everyone to get long again. And I am trying to keep people on top of this as much as possible. So I'm not short this market. I will capitalize on that pullback. I also intend to go long at one particular point and capitalize on that rise. It's that simple. Really, this is how the Wall Street banks do it. This is how the George Soroses of the world do it. And this is how the Greg Mannarinos of the world do it. And I'm trying my hardest. And I'm just so thankful to be on your show here to let people hear this, to let people understand that, not all of us Wall Street guys are bad people. I'm trying to help you. I'm trying to help you understand how to protect yourself and what you can do. And take that advice with whatever you want. But do your own research, period.
Gregory Mannarino, traderschoice.net. Gregory Mannarino, thank you for joining us today on USA Watchdog.
Always a pleasure. Thank you.